Good evening. Hope you all had a fantastic Friday. Today the market capped off the strong but quiet week with a gain, as the S&P 500 has now had 4 straight weeks of gains. The S&P 500 had a gain of 0.34%. The Nasdaq gained 0.42%, as tech shares Apple and Nvidia had gains near 5%, but other tech giants were weak. Finally, the Dow led the indexes with a gain of 0.69%. U.S. home sales soared an extraordinary 25% to 5.86 million in the month of July, as citizens seek more space as they work from home and are encouraged to buy due to the low interest rate environment. These numbers are the highest since December 2006 and are up 8.7% from a year ago, as the housing market has clearly rebounded from the fall and the spring during the onset of the pandemic. This is great news, as a strong housing market could help boost the economy due to consumers spending more on home goods and renovations, while home builders ramp up activity. But the strong demand and a shortage of supply has pushed the median home price to a record high, which can make houses less affordable for first-time buyers. In fact, demand is so robust that 68% of the houses that sold in July were on the market for just less than a month. On top of this, the median existing home price rose 8.5% from a year earlier to $304,100, which is a record high. Earlier in the week, the Commerce Department said housing starts, which is a measure of U.S. home building, rose 22.6% in July when compared to June. It looks like the U.S. economy picked up momentum as manufacturing firms shook off the rising amount of coronavirus cases during the month of July. Data firm IHS Markit released their Composite Purchasing Managers Index for July, which is a measure of manufacturing and services activity. The index had a reading of 54.7, which is up from the reading of 50.3 for the month of July. This reading is an 18-month high and signals economic expansion. To be specific, the index of manufacturing output was up to 53.6 from 50.9, while the services activity index rose to 54.8, which was previously at 50. According to IHS Markit, the rise in the index was due to increasing demand, which was driven by returning customers, new marketing campaigns, and the easing of lockdowns overseas, which helped boost exports. Survey respondents said they remained optimistic about the next 12 months, although they expressed concerns about the pandemic. According to the Commerce Department, U.S. output fell at an annualized rate of 32.9% in the second quarter, which was the worst contraction on record. Expectations for the third quarter are currently looking for an increase of 18.3% on an annualized basis. Regardless of this good news, other indicators suggest the U.S. economy remains vulnerable. New applications for jobless benefits rose last week, and payroll gains slowed in July compared to June. To top this off, more pain could be on the way as several companies, including Boeing, have announced job cuts. Tech was the clear winner as the sector rose by more than 1%. Consumer goods was strong as well for the second day in a row, as the sector added on more than 0.5%. Basic materials were crushed for a loss of more than 1%, while oil and gas also fell close to 1%. All varieties of large caps gained, while all varieties of small caps fell. Overall, it was a pretty scattered day. The best performer in the S&P 500 today was Apple, which had shares rise by 5.15%. It is not clear why the tech giant was able to gain more than 5% today, but their court case against Epic Games did take a step forward. Apple told the court that Epic Games wanted special treatment that went against their App Store policies. Investors seem to be confident about Apple's chances for a positive ruling, as a current judge actually ruled in favor of Apple in a case very similar to this, which occurred a couple of years ago. The other winner of the day was computer chip maker NVIDIA, which had shares rise by 4.47%. There was no firm-specific news regarding the company today, but analysts have been raising their price targets on the stock as they point to a strong long-term story for NVIDIA. The biggest loser was Keysight Technologies, which is an electronics company. Shares fell 6.75%, which was due to their earnings that we happened to cover in yesterday's video. Overall, earnings seem to be strong, as they had a top and bottom line beat, and a beat that happened to be pretty strong. The company even said that they expect to be back to 100% production capacity by quarter end. It is not clear as to why shares fell after seemingly positive earnings and comments. The other loser was Marathon Oil Company, which fell 4.36%. The company had shares fall due to oil prices dipping. Getting into earnings, we'll start off with Foot Locker, ticker symbol FL, which is a retailer with a focus on streetwear and footwear. This morning's earnings were pretty positive. Non-GAAP EPS beat estimates, albeit by a small 2 cents, as they had a gain of 71 cents per share. Revenue somehow managed to grow by 17.5% on a yearly basis, as revenue tallied $2.08 billion for the quarter and beat estimates by a minuscule $10 million. To top this off, they even reinstated their dividend. However, it isn't large, as the forward yield is 2.21%, due to the executives aiming to continue their strong financial position but still reward shareholders. Shares ended the day positive by 1.4% after the double beat. Next up, we have Deere Company, ticker symbol DE, which is a company known for its John Deere brand and its agricultural and construction equipment. GAAP EPS soared by estimates by $1.32, as the company had a gain of $2.57 per share. Revenue did fall by 11.1% on a yearly basis, but still finished the quarter at $8.93 billion and flew by estimates by an enormous $2.23 billion. To top this off, Deere raised their outlook for future sales numbers. Shares were strong with a gain of 4.4% due to the very big earnings beat. Lastly, we have Pinduoduo, ticker symbol PDD, which is a Chinese e-commerce company. Non-GAAP EPS beat by a large 19 cents, as they lost a cent per share. Revenue told a great story, as it was up 63.2% on a yearly basis, as it totaled $1.73 billion for the quarter, but did miss estimates by a very, very small $10 million. On top of this, average monthly active users soared 55% to 568.8 million for the quarter. Shares plummeted by more than 13.5% after the small miss on the top line. That is all that I have for tonight. I hope you enjoy your Friday evening and weekend. Please leave a like and subscribe, and comment if you have anything you feel like sharing. Thanks again, and I look forward to seeing you on Monday.